Morning traders, and happy Friday. Okay, so last night we had some important US economic data. We had US CPI inflation numbers for September, and the market was expecting for that data to come in a touch weaker than expected. So the headline number, market was expecting to go from 2.5% from the previous month down to 2.2%, and core CPI from 3.3 down to 3.1%. The data actually came out actually hotter than expected. So we didn't get that weakness. Actually, headline came out at 2.4, and core CPI came out at 3.3%. But at the same time, we also had US jobless claims. And US jobless claims were supposed to come out at 230,000 expectations, and they came out much weaker than expected at 260,000. So after we got both data prints, the first thing the market did was focus on the inflation number. So we saw US 2-year yields, which have had a phenomenal run in the last couple of weeks, spike up and make a new high, almost at 4.1%. And we also saw the US dollar rally on the back of that. But it was short-lived. And the simple fact for that is because the market focused more on the weaker US jobless claims number. So we ended up seeing the US 2-year yields fall all the way and close below 4%, down towards 3.96, and the US dollar followed what happened to the US bond yields, and so we saw a weaker US dollar at the close of trading today. Okay, today the focus is on China. It's been the focus all week. When the Chinese markets reopened on Tuesday, we had news that the state planners were going to give us more fiscal stimulus measures. Now, when they disappointed in that news conference, we saw China's markets sell off. Now, they've come back again and said, okay, you're going to get that news on the new fiscal stimulus measures on Saturday, on the weekend. So Chinese markets and Shanghai Comp yesterday closed marginally up. So look, I would imagine going into the weekend that the Chinese markets probably will still trade, in the positive, in the blue, on the back of this expectations of fiscal stimulus measures that we are going to get, tomorrow on the weekend. The other main focus going into the weekend, obviously, and something that hasn't gone away and won't go away, is the tensions in the Middle East, and whether or not we're going to get retaliation from Israel on Iran. And so obviously if that does happen on the weekend, you are going to get a gap risk come Monday. Now look, gold, which I know we're all trading and everyone loves trading. We did have a bit of a flush in gold this week when we traded back down towards 2,600, but that was obviously bought overnight. The traders have bought the dip. We're trading back up at 26.30 at the moment, opening the day on Friday. And I would imagine going into the weekend that traders will want to stay long for the geopolitical risks. And as we've mentioned quite a few times, if obviously this happens, I would imagine gold will probably be trading well above 2,700 very quickly. Okay, look, I hope you have a great end of your week trading, and we'll check back in again on Monday.